Hello everyone, welcome to the webinar Trading Psychology and Discipline with Thomas. I'm Thomas. I will be the one that will explain to you more about the webinar and everything that you should be familiar with. So first of all, welcome. As you can see, Trading Psychology and Discipline with Thomas, we will be discussing a lot of major things that you should be familiar with when trading on our platform. Wonderful. So as you can see, Thomas Wagen, I'm working here in AvaTrade for the last few years. And now I started doing the webinars I will be sharing with you today for my knowledge and expertise regarding every scenario that normally clients are facing with. Obviously, as an account manager, I got the chance to discuss with many clients about the regular scenarios and challenges that each one of the customers have as a trader. So I will be sharing with you today from the knowledge that I have managed to accumulate throughout the years. Before we start, this risk disclosure and the capital markets and trading information disclosed in this webinar is provided for information purposes only and should not be constructed or applied as investment advice, a recommendation, or suggestion. So basically today we will start with a few things I will share with you regarding the WebTrader and the psychology behind trading. This is a very important subject that many traders have issues with when it comes to psychology of trading, how to manage the account, how to do proper risk management, money management, how to calculate profits and losses. Throughout the webinars, if you will have questions, you can click on the button to ask a question and I will answer the question once I finish the relevant subject. So as you can see, this is the WebTrader page. And here you will be able to see different features available. When you click on the three lines on the left top, you'll be able to see my accounts and payments. When you click on my accounts and accounts, you will be able to see the relevant account numbers that you have. And if you don't have a demo account right now, I suggest that you click add an account demo and set up an MT5 demo so you will be able to experiment while we are on the webinar. You can experiment yourself on a demo so you get the live feeling of how to do the things that we are going to discuss. So now I'm going back to the trade feature. Here you can select for a trading instrument that you want to trade on. If you don't know what to trade, here you see categories divided by different sections: forex, indices, crypto, commodity, stocks. And also here you can see different sections: hot, most rising, most falling, most buying, most selling. So for the sake of the example, we can choose something. Let's say gold. Then you click on the instrument. So the new order page will open on the right. This is the new order page on the WebTrader that is giving you some extra features that are available. So here you can see you have the buy price, you have the sell price. The difference between them is the spread. You have the lot size. The lot size represent the exposure that you want to set for the position. Okay, you can start. The minimum lot size is equivalent to 0.01 lot. Okay, the leverage on this account is 1 to 200 on gold. For some of our EU clients, the leverage on gold will be 1 to 20. The leverage depends on the jurisdiction where you register from. Okay, so for the non-EU clients, you will have the leverage of 1 to 200 on gold. What is the leverage? The leverage represents the amount of money that is required from you to open new positions. So if I choose the minimum exposure for 0.01 lot, you can see the margin impact. This is basically how much free margin is required for me to be able to open the position. If the free margin is basically lower than the margin impact, I will not be able to open the position and I will get a pop-up that I don't have enough money in the account to place the order. For example, if I will type something like 100 and I will not be able to open such a big order. Okay, so specifically for my account, as you can see, my free margin is 11,442.21. So in that case, I'll be able to open. The biggest position size will be around 5.5. 5.5 lot is the maximum I can open with my current free margin. Okay, so we go back to the minimum just for the sake of the example. Here we'll start to go through the different options we have below. AVAProtect. I'm not sure if you guys are familiar with what is AVAProtect. This is a product that we have launched a few months ago that enable you to set a certain basically when you open AVAProtect, you can see here it's asking you to set a duration for the protection. So we offer 1 hour, 3 hours, up to 2 days duration. Okay. Now, what does the duration mean? It means that you are paying X amount of money. As you can see here, you're paying $38.3. Okay, in order for you to get a protection on your position. So when I mean protection, what it basically means, it means that if you lose money within that duration, negative floating, it will be reimbursed automatically because of the fact that you paid for that service called AVAProtect. So in that case, if you open the duration for 2 days and you wait for the position to expire for the duration, negative floating on your account will be, let's say, $50. So the $50 will be reimbursed automatically. And then the position will keep going until either you close the position yourself, but we will not be reimbursing any more money after the duration expired. So in that case, if you want, you can keep the position open, or you can just close the position and open a new one with a new protection. Now, the price of the protection will depend on the lot size. Okay, if you choose, let's say, a bigger lot size, 0.1 lot, so we are talking about a multiplier of 10. So if the minimum is 0.01 lot, now you're trading 0.1. So multiply 10 the profit or loss per each point. Okay, the market moves. Therefore, the price is more expensive, as you can see, 338. And if we change it to, let's say, 1 lot, so the price changes now to 3.8 thousand. So the reason why some people choose to use it, because this is a product that if you use, you can limit your losses. So you know that you will not be losing more than the amount of the protection. So how does it work? In order to set up an AVAProtect position, you need to have enough margin to place the order. As you can see here, the margin impact is 2038. So you need to have that amount of money to open the position. Plus, you need to pay that amount of money upfront, 3,834. Obviously, it's moving. And this will be deducted in advance as soon as you open the position. So this is a product called AVAProtect. For every one of the clients, we offer different kind of education. So if you do have any questions, always you can reach out to our customer service or request to talk with an account manager. If you want to have like a personal account manager, normally we have different accounts starting with 1,000 and above to have your own account manager to ask him questions, also to schedule one-on-one calls. So you will be familiar with how to use our platform, which is a very important thing. In order for you to become a successful trader, you need to be familiar with all the major calculations that you must do. So now you can see here below, we have more options, take profit and stop loss. You can use these two features. First of all, take profit and stop loss. These are orders that when you set them, you can limit the position to basically have a closure when the price hit the take profit and the stop loss. So you can see here, take profit and stop loss. Okay, see, I got some questions. Yeah, basically in terms of AVAProtect, you will see this feature available only on currencies, gold and silver. It's not available for all of the instruments. It's available only on currencies, gold and silver. Okay, I see someone asked. And another question, not very clear what exactly is the question. Okay, perfect. So we can proceed. Let's just go back here to the new order page. We cover the margin impact is the amount of money required to place the order. We cover the spreads. AvaProtect, that's the product we covered already. The take profit and stop loss, I will explain to you now how you can use it. If we start with the minimum exposure 0.01 for the sake of the example, you have two ways to use it. First of all, you can change the price on the left to any price that you want, for example, 4,100. Once you change the price, it's going to give you the possible profit. So it basically means if the price of gold hit 4,100, the possible profit will be whatever you see here. And this is with the minimum lot. Okay, if you change the lot to, let's say, 0.1, in that case, you will see the price will go dramatically, okay, by 10. So you can make 10 times the profit due to that increase, or 10 times the loss, of course. If you change it to 1, so it's a multiplier of 100 from the minimum, and then in that case the profit will be around 2,000. So if the price of gold reach 4,100, the possible profit will be here around 2,100, whatever you see here, and so on and so forth. You can keep increasing if you want a bigger position or just to experiment. So for 10 lots, you see for the same one is 18,000. And now we can proceed. If we wish to set up the take profit order. The only thing we need to do is to click buy and it will be executed. Specifically for the stop loss order, we can set up value, whatever value we want. Okay, let's say 4,885. It will be a loss of around $2. So for you as a trader, you decide your own risk money management. And this is the main thing that we will be discussing today. As a trader, you decide for yourself how much money you are willing to risk on the account. If you want to risk 1%, 10%, or if you want to have a bigger exposure, is really something that it's you control it, and you are the one that you can set your own risk reward, and you decide your own risk appetite. So here on the stop loss, you can see if you change the price to, let's say, 4,000, it's giving you the possible loss, which is equivalent to around 82. Again, if we change the lot size to 0.1, so again, you see the loss will go as well by 10. Once we decided what is our take profit and stop loss, whatever we want to set, if we don't want, we can just tick out and we can open a regular position without using a take profit and stop loss. Then we just execute the order. This is just an example I'm executing on a demo for you to see how it looks like. As soon as I open the position, it will appear on the position window. Here I can see the details about the position, the open price, the value, the size. And in case I want to adjust the position, I click here on the pen. I can add a take profit now after opening the position. Let's say I want to add a take profit to 4,150 and I want to set a stop loss to 4,050. Then I click update and you can see I've updated the position, take profit and stop loss accordingly. Now I can, if I wish to close the position, I click on the X. I can close a portion from the position. Here specifically I open the smallest position size. So I just click close position and I will see the position on the trading history. I can change it accordingly, last 7 days, last 30 days. Normally, if you want to see all positions, you need to change it to all. So now I see here, we've got the question, leverage is a two-edged sword. How can I use it on trading? So as I mentioned, in terms of leverage, you decide what is the level of risk or the level of profit you wish to have for each position. If you trade on a bigger lot size, you will have a bigger level of risk or a bigger level of profit that you can have per each point that the market is moving. So the leverage can go in your favor or it can go against you in case the position is not profitable. So basically that's the main thing regarding your question. So now we can proceed with the other features I wanted to show you. So we covered here in terms of the exposure, you can set a certain loss that you want to have. Let's say 300, and the system will tell you here what is the price that is required. Once gold hit this price, what will be your loss? You don't really need to set it a stop loss order or take profit order for that. The next one I wanted to show you is execute when price hits is equivalent to a pending order. This is an order that will not be executed right now. It will be executed depending on the market condition. So you set here what is the trigger price that you want to have for the position. Let's say when gold reach the price of 4,130, you want to have the position open. Let's say you don't want the stop loss or take profit set. So in that case, you click buy to execute the pending order. The lot size that you choose, whatever you prefer. You click buy to execute the order, and you will see it here in the order page. Now, if you wish to set an expiration date, also you have that option available on the page. You can set here an expiration, cancel on a certain date, and if the value did not reach up to this date, so what will happen? The position will be cancelled. In order for the position to be triggered, you need to have enough margin, free margin, at the time that the position is being triggered. If there is not enough money, what will happen? The position will not be open automatically. So basically, the pending order is a tool that many traders like to use. The main purpose of it is if, for example, you are not awake and you want the system to automate your trading. So as soon as the price hits that value that you set, so it will happen. Also, for when it comes to trading discipline and trading psychology, you can set your trading in a way that you set things in advance in terms of your stop loss and in terms of your take profit. You set it in advance. You set up your pending order, and then you let it run automatically. So in terms of the psychology side of trading, you will not really be affected by it because of the fact that you set yourself with a pending order. Okay, so here we managed to discuss a little bit more about the new order page. And now if we go back here, so the next thing that is very important for each one of the traders to get themselves more familiar is the trading account overview panel. And I can tell you that many traders, even experienced traders, are not always quite familiar with the way that the most basic thing means. So that's why I'm here for. I'll be happy to explain to you and elaborate a bit more about that. So if we go through the panel that you see, over here, this is the panel: balance, free margin, used margin, equity. So each one of them represents something different. So we have the balance. Is basically it represents your closed position. So whenever you close a position, the balance will be updated. Okay. When you look at the free margin, this is the money you have for opening new positions. The equity is equivalent to the real value of your account, including your open trades. So what does it mean? That if you want to know how much money you have with your open trades, you need to close. Let's say you close all of the positions, you will be left with the equity. Okay. If you have any questions, of course, you can ask me. I will answer as you go. Then we have the used margin. The used margin represents how much margin is being used in the account. Okay. So we'll give you an example now. let's say the margin impact right now is, let's say if we open a position on, let's say 4 lots on gold, you see the margin impact is equivalent to 8,169. When I click to execute the order, what will happen? The used margin will be 8,170. So it's telling me how much margin was required to place the order. This is like a collateral, okay? When I close the position, the free margin will be added back. So let's give you the example. You click positions, and then you click here to close the position. As soon as you close the position, it will be added back to the free margin. So it's money that you can use for trading. That's how you manage your account, basically. When you open a trade, you need to know how much margin was deducted from you. So when you close the position, you have more margin to trade. Then we have the margin level is maybe the most important thing that each one of you should know. So the margin level, it represents basically we have something called stop out. So if you are a EU client, you get stop out at 50% margin level. If you are outside the EU, it will be closed at 10%. So here you can see an example for this one. We change, for example, we change it to something random like AUD CAD. Once I open the position, it's giving me my margin level in percentage, which is equivalent to 1,132%. Now, if I want to open another position, I have free margin left of 10,000. So if I want to use all my free margin, I open a position with 60 lots, and you see my margin level dropped to 96%. Okay, so whenever your free margin is in negative, you will be able to see that the margin level is also below 100%. When the free margin is 0, the margin level will be 100%. Basically, that's how it works. So this was the example, so you can see what is the margin level and understand the importance of the margin level. If you keep the margin level as high as possible, above a certain percent that you choose, so then you are less likely to get into a zone where the margin level is below 100%. For example, above 100%, 200%, 500%, it's up to you. Okay, so now I will just close these two positions in order to increase my margin back. If you have any questions, you can feel free to let me know. I hope everything is clear until now, and now we can proceed. We got the used margin, margin level, margin increase whenever you close the position. The position should basically increase your margin level and your free margin. The next point I wanted to discuss is hedging. Hedging is basically when you open a position, one buy and one sell with the same instrument, with the same lot size. What will basically happen is that the first position will deduct margin from the free margin, and the second position, that is so-called the hedge position, it will not deduct margin from the account. So I will give you an example now, because many traders really like that feature. So the feature is part of trading, basically. So if we change, let's say, the first thing pops up, Euro CHF. So as you can see, for one lot, the margin impact is, let's say we change it to 10 lots, 2,800. So we open 10 lots on Euro CHF, and as soon as we click to execute the order on a buy position, okay, you see there is a used margin of that amount, 2,885. Now, if I click on the same position, sell Euro CHF, I choose the same 10 lots. So you can see the margin impact is nothing because we are doing a hedge position. So now you can see I'm fully hedged on Euro CHF. Okay, why? Because I have 10 lots open on buy and I have 10 lots open on sell. It means I'm fully hedged. It means that the first position, it was deducted the margin, and the second position, it didn't. So I'm sure some of you were not really familiar with the way it works when it comes to hedging, but I have a lot of clients who really like that concept, and it's something that may be relevant for you. So now I will just close the position. Also, when it comes to psychology of trading, you need to know how to manage your account in a way that you can calculate approximate profits, approximate losses. You know what kind of risk management you have, whether you are risking 1% of the account or 5% of the account or 10% of the account, something that is up to you. Now we can continue. So we have here the basics, buy and sell. That's we cover the difference between the buy price, the sell price equivalent to spreads, lot size, margin impact, AVAProtect. We covered already. Here I can provide different kind of examples. So we will quickly cover that again, just in case you did not really understand what is AVAProtect. So in order to open the AVAProtect position, you need to have a free margin to place the order, and you need to have a required money for the protection cost. The protection cost will be deducted as soon as you open the position. How will your losses will be reimbursed on AvaProtect is when within the duration, if you close the position, the money negative floating will be reimbursed automatically, or if you wait for the duration to expire, the negative floating will be added automatically. How do you make profit with AvaProtect? Basically, you have the cost of the protection. So when you make profit on the position, if the cost was $39, you need to close the position above that amount to make profit. Basically, what happens if my position continues after the protection expires? In that case, you will not get reimbursement more than the reimbursement you got when the protection expired. So if the position keeps going, you are responsible to manage your account the way you want. You can also close the position when the expiration of the duration reach, and then you can open a new position with the AvaProtect with a new duration. Here I gave some examples. If I open a trade 0.01 lot on gold, a 2-day protection cost $39. If the negative floating was $100 at the expiry, so I get the reimbursement of $100. I effectively saved $60 because I should have lost more, or should have lost 60. Second example, if I open a position with one lot, again, let's say today a protection cost, which is equivalent to $3,933. If my negative floating at the expiration is 10,000, so I'm basically saving $6,000 because I was supposed to lose 10. So basically, that's just different scenarios. The same thing here. 0.01 lot on gold, protection cost 39.33. If you end up with a profit of $10, you will not get any reimbursement. And another example, protection cost 3,933. If you end up with a profit of $2,000, again, you get no reimbursement. So here, pending orders, we discuss how to execute a pending order, execute when price hits, take profit we discussed, and basically we managed to already discuss the main things that I wanted to show you regarding the basics of trading for today. Additionally to that, every trader should know the basics, how to navigate throughout the platform, how to open positions, how to close positions, how to navigate their own level of risk, so they will be able to trade regularly. In addition to that, in terms of the trading psychology, this is something that many traders have an issue with when they are trading. They are not really aware what is their aim point when they want to, let's say, get out of the position. They don't really set in their mind or in a certain organized way where what is their exit point. So also when you are trading, this is something that is substantially important to know. When you want to get in a position, you can keep yourself and organize a journal or Excel sheet and really have defined plan for your account, so you know what kind of instrument you are planning to trade, what is the plan that you have for the trade when you think that the value will hit, let's say, 10% profit or 20% profit, or if the position reach above 5% or 10% loss, you will decide to close the position. So this is something that you need to decide with yourself before opening the order, and you can keep and organize the Excel sheet, or you can put it in a Word file. You decide wherever you want to organize it, and it will assist you with your trading plan. This is something that is also very useful for people, so they will be more organized with their trading. So this is in terms of psychology, it's very, very important to know your exit plan and the reason why you decide to open a position, whether it's based on technical analysis or whether it's based on the fundamental analysis. These are the two main analysis people use. The technical is based on the history, based on what happened before, based on the charts, and you can also do with yourself different type of charting strategies. And as for the fundamental, it's basically based on big events and the news that are happening. So in terms of questions, I see I have a question: how long it takes to learn how to trade? In terms of learning how to trade, it basically depends on the trader. Each trader have their own time. Some people can learn how to trade in a week. Some people can learn how to trade in a month or a few years. So it really depends on the understanding and your trading skills, because the main point here, when you just click to open a trade or click to close a trade, this is quite easy. But the difficult part is knowing to predict what will happen to the value of the asset, whether the value will go up or whether the value will go down. This is something that most of the traders have a challenge to indicate what will happen to the value. And for that, you as a trader, it's your responsibility to set yourself with a strategy, and hopefully that after that you practice it a lot, your strategy will get better and better. I know traders that it took them a short amount of time, and I know traders it took them a bigger amount of time to get more familiar and more profitable. But trading does involve risk, so it's not really easy to generate consistent level of profits. There's a lot of learning that is required. You need to learn the market, and you need to know a lot about whatever you decide to focus on. And it's a lot about focus. If you decide to focus on one specific industry or even one specific instrument that you want to trade on, obviously you can go and investigate this market thoroughly by attending courses like you are attending today, or going through different books about fundamental analysis or specifically on commodities. Eventually, knowledge is the most a powerful tool that we traders have, and clearly the traders that consistently thrive to learn more and more, they can dramatically improve their trading analysis. So in terms of the psychology of trading, some people say that it's more difficult for them to control themselves than to place the order. And many other people will say it's more challenging for them to decide what position to open, when to close the position. I think that as each successful trader should know how to combine between the technical side, the fundamental side, between the psychology of trading and the analysis itself. So today we spoke about the basic things, about some features that we offer in AvaTrade, some basic features that can help you to know how to do some basic calculations. And in the future, we will be having another webinar, and we will be able to discuss more different strategies that you should also be familiar with when trading. And I hope you guys enjoyed the webinar today. It was very nice to chat with you all and explain to you more and share for my knowledge and understanding on the major mistakes the traders are doing. If you guys have any more questions, you can feel free to ask me. I will wait to see if there's any other questions you can ask. I can see there is a questions regarding Nasdaq, asking what is the requirement to place an order, the minimum order on the Nasdaq. So on Nasdaq, you can see we have something called nano lots. So you can trade on 0.001 lot. It's available only on MT5 platform. And you can see the margin requirement is about 12.6. This is with a leverage of 1 to 200. If the leverage is 1 to 20, so in that case, you'll need more, around $126 for this position. And that's it. So it was a pleasure talking with you all. I hope that you learned from the webinar, and I will see you again next week. We will continue and discuss more. All the best and good luck with your trading. Bye for now. Take care.